G'day guys, welcome to the September Australian property market update. Now we've been at these updates for a little while now, and I've actually never seen any previous month where all of the key performance indicators looked as strong as what I'm about to present. Let's crack into it. Now, when we look at the capital growth rates across Australia's major metro markets over the last month, we can see that every single market was up significantly outside of Hobart. What's statistically interesting to me though is the massive jump or resurgence in the Brisbane, Perth and Adelaide markets post interest rates going down in the last month. We can also see when looking at the chart that Sydney and Darwin are up significantly over the last month as well. Now, when we look at the average capital growth rates over the last 12 months across Australia's capital cities, we can see that Darwin was the clear top performer at the moment. But what's interesting to me is Brisbane has really come back in the last couple of months, with Brisbane taking over the likes of Perth and Adelaide for the first time in the last 18 months in Australia. Now, my favorite market at the moment is Melbourne, as everybody knows, and that is because historically speaking, according to Cotality, prices between Sydney and Melbourne are now at a once in a 30-year low. Now, what I've found from personally investing over the last 15 years is that generally, Australians love a winner and they'll back the market that has done well or the market that's doing well right now. And that's why I believe for the rest of the year, we'll see Darwin continue to do better and better and Brisbane come back into the limelight again. Now, when we look at the rental vacancy rates across the country at the moment, Brisbane, Perth, Adelaide, Hobart and Darwin are chronically undersupplied right now. In fact, they're sitting well below the 2% mark, which would be considered significantly undersupplied by Cotality. But this is no surprise, right? Because we know the Australian government right now is bringing in over 500,000 new residents each year. And we know the trust in the construction industry has been completely shot over the last 5 years since COVID. All of this in certain markets in Australia is resulting in a perfect storm, which in conjunction with the first home buyers grants coming on, as well as the tax benefits that the average Australian has seen, as well as interest rates going down again, result in a perfect storm, which is the Australian government putting petrol on the Australian property market short term. Now, when we look at auction clearance rates over the last month, they're now at the highest level that I've seen since I started recording these videos. Every single market in Australia from Sydney to Canberra has recorded auction clearance rates above 70%. That is a very, very early leading indicator that the market is warming up around the country, with more and more properties selling either at the auction or under auction terms immediately after. Now, what I love about Aussies is that even though the data is getting better and better at the moment, we're feeling worse and worse about the market. In fact, according to the ANZ Roy Morgan report, consumer confidence in the last month, with everything going up, actually went backwards by over 3 points to a level that was just above COVID or the last GFC. You've got to love the approach that Aussies have to tall poppies and things going well for ourselves. Now, when we look at unemployment rates, they sat at the 4.2%, which is a phenomenally low level. In fact, when we look at the last 46 years, the average unemployment rate in the country sat at 6.62%, but we are well below that at the moment and at almost full employment as a nation. Now, according to the AVS over the last month, 62% of the loans that are being written were to mums and dads and owner-occupiers looking to buy their own home, versus 38% to investors. Now, over the last 12 months, I've seen that nudge up marginally by between 2 to 4% to investors. Generally, at this later phase of the longer term real estate cycle, we'll see more and more investors and mums and dads coming into the market to try and get some of those gains that they've seen friends and family members make over the last 5 years. Now, obviously, interest rates went up very significantly with inflation a couple of years ago, but according to CBA Bank and the major banks around the country, they're on the downslide, with maybe even another rate drop or another 2 rate drops expected before Christmas this year. Now, in terms of the number of listings in the country over the last month, listings were up about 5%, which is what we'd expect moving into the spring selling season. Still plenty of incredible properties across the country to buy if you know which markets and which suburbs to focus on. Now, one of my favorite indicators to look at the health of the Australian banking and financial system, as well as the strength strength in the Australian residential housing market is the number of properties sold under distressed conditions. Now, in the last month, Australia-wide, there was just 4,100 properties sold under distressed conditions, according to SQM research. Now, the trend that we've been seeing since the interest rates started to come back down and we didn't fall off that mortgage cliff is a month-on-month decline. And over the last month, we saw the number of distressed listings drop another 4.5%. In fact, when we look at this time last year to now, the number of properties sold under distressed conditions across the country is down over 20%. Now, in terms of one of my favorite things that I do in these updates in terms of this month's gold nugget is there is some phenomenal first home buyers grants coming in to drive the bottom of the marketplace up in Australia. I mean, to make housing more affordable and easier for the average person to buy. Now, some of the things that I'm starting to see is these 5% government-backed loans, which is absolutely crazy. That means that certain people that qualify will be able to put down just a 5% deposit, pay no stamp duty, have the government back their home loan, as well as pay no lender's mortgage insurance. Now, on top of that, we're seeing from the 1st of October, the ceiling for properties across Australia. In fact, in Brisbane, for example, first home buyers can now go out there and buy properties up to $1 million. In Melbourne, it's going to 900K and it's rising Australia-wide. Now, what this means for all of us is the bottom of the market is going to lift very significantly, very quickly as the market takes the gains that the government is introducing. That will have a flow-on or a knock-on effect where people that are living in homes that can be sold to first timers will sell them out and upgrade, which will push the middle of the market up. And those people sitting in good houses with good equity and good cash flow in the middle of the market will aspire to the top of the market, and it will ultimately, over the next 12 months, push the entire market further north. But as with everything positive in the world, there is also negatives as well. So a client of mine sent me a text message this week, which I wanted to read to you. Global rating agency Moody's warns the US is heading towards a severe recession with over 1/3 of its economy already in crisis. Experts feel ripple effects could shape the global economy. On top of that, in Fortune over the last week, Ray Dalio came out and said, and Ray Dalio was the founder of Bridgewater Capital, which currently has over $130 billion of assets under management globally. If you're with the royal family, the Australian government, or you've just come into a shit ton of money, he's the guy that you go and see on how to invest it. Now, Ray has also said that we are getting very, very close to levels of debt from a government perspective in the US not seen in the last 100 years, honestly, since World War II. And again, he is seeing the cracks in the financial system. His solution is we begin to bring interest rates further down in the US and globally to create a softer landing. But as we all know, and I want you guys to know, we're at the very pointy end of the longer term real estate cycle, and it is certainly not one of those markets where you should blindly go into an area that is absolutely cranked in the last 5 years, nor is it the time to go all in with all of your money. It's a time to be safe because the canaries in the coal mine, like the rating agencies in the US, like the Fed, like the Reserve Bank of Australia, and people like Ray Dalio and Warren Buffett are coming out at the moment and saying things aren't as good as the asset classes like crypto, silver, gold, and property around the world are showing right now, and we should be wary moving forward of the storm ahead. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.